Good afternoon. Welcome to Wall Street Wednesday. Today is February 24th, 2021. So here we are, and I'm Professor Milligan. So welcome to Wall Street Wednesday. As you guys know, I'll wait a couple of minutes to give people a time to sign in. Let's see what else I'm going to tell you. Well, the last hour of the day, what happened? GameStop started to run. Stock closed. Oh, I'm sorry, it wasn't closed. It was halted trading. Let's see. GameStop halted trading. Last trade was at, I'm looking at, up 40 points. Oh, it's back open, aftermarket trading. So it was up to 80, it was up to 91 bucks. Now it's coming back a little bit. So that's what's going on with GameStop. I'm going to wait a few minutes like I always do to give people a chance to sign in. So I see people starting to come in. What's going on, Andrew? Welcome. Yep, welcome all you guys. Welcome. Just sitting here. I see where the Dow basically set a record today. Excuse me. Yeah, so with the Dow. Come on, what's going on here? I don't know. What's going on here? I hope I'm still live. All right, so I am. Sorry about that. Hey, David, what's going on? Natalie. So as you guys sign in, I'm pretty excited about today. Some really good things are happening. So I'm looking forward to sharing these with you. Again, for those who don't know, I posted some charts or some pictures and some graphs up there today on some things I'm going to talk about. Nice picture, David. Some things I'm going to talk about today. So I'm excited about it. I think you'll learn a lot, and the bottom line is we'll put some money in your pocket. So just give me a few minutes to give people a chance to sign in. Let's see. My short-term positions were killed from this week. I don't think am I sure? I'm not even short anything right now. My core positions, my long-term stuff is actually, they bounced back a little bit, not to where they were, but they bounced back a little bit. They're basically techs. So I'm not surprised. There was, as you guys saw, if you saw in the opening, watched the market today, there was a separation. The Dow was up or slightly down, and NASDAQ was down a whole bunch more. So it looks like everything closed up today. From what I'm seeing, it says the Dow set a record, so I got to go look and see what that's all about. One of the things that's really interesting, what's up there, Nina Colada? One of the things that's really interesting about this whole thing is, which is interesting about the market, when one of my trading strategies is I look at the VIX and I determine if I think the market's oversold, overbought. And when I do think the market might be oversold, overbought, when I'm going long the market, I typically will use the NASDAQ 100, the Qs. The reason being NASDAQ, especially the fact that NASDAQ is heavily weighted in technology, when that market, that whole market decides to move, it usually moves faster than the S&P. So I get more bang for my buck. So I'm gonna repeat what I just said. When I decide to go long the market, I have a certain strategy. I use the VIX to try and determine when the market's oversold, overbought. And when I decide to go long the market, instead of buying the S&P 500, I actually buy the NASDAQ Qs. I'll either buy the Qs themselves, or I will buy the call options on the Qs. The Qs will give you more bang for your buck. So, and as you can see, NASDAQ will move faster and harder than the market. Now, there is a correlation between all three markets. Every now and then that correlation will be broken where the Dow's up and the NASDAQ is down. But again, overall, over time, the correlation is there. These markets typically move in tandem. But again, NASDAQ does have more tech stocks, more, what I'd say, more growth stocks in that respect. So you'll see more bang for your money. So if you want to go long the market, I know I'm redundant, but I had some people just going, if you decide that you want to go long the market and play the market to the upside, I use the Qs, the NASDAQ 100. The other thing too is that the Qs give you more bang for your buck. And by the way, the NASDAQ Qs is the top 100 tech stocks on the NASDAQ, on that market. So you're talking about companies like Apple, Microsoft, Amazon, Alphabet, you know the usual suspects. So those are the names on there. So that's what I typically use. So again, welcome guys. I'm pretty excited today. So let me start with a few things. And by the way, feel free if you want to type in some questions. I promise I'll get to them. I promise I'll try my best to get right now. Where's my pictures? Right now, close that. Right now, I want to start talking about a couple of things. So the first thing I want to talk about today is right here. What you're looking at is the dates, and you can find these on a number of different websites, but this is the date of when they actually report short interest. All right, so what you're looking at, in fact, one is due today at the close. We're closed now, so after market hours, I'll check after I get off this call. One is due today, which is February 24th. Wednesday is the short interest report. If you've been looking at short interest reports, those short interest reports have been for basically January. The last one, I believe, was January 29th. I'm looking for that right now on the picture. Let's see, January 29th was the last one. So what you saw January 29th is when it came out. So one is due out today. It might not show up on your websites if you are using the free stuff until Friday. But again, this is a free report. And again, the reason why you want to look at this is where, I'm not sure what to call these guys, but this is where the guys who were shorting GameStop, this is one of the things that they look at. All right, they look at this report. When this report comes out, it talks about, as you guys know, which companies have the biggest short positions, how much, and then they do the work on that part. So the reason why I have it here is it's one of the things that you might want to look at. I look at it on a regular basis, and I'm going to tie that to something else. So again, for those who just joined me, what you're looking at is the short report when it comes out. So the next one, I said, is they finalize it today, which is the 24th. So you should see that in print sometime between now and Friday. All right. So if you're getting your short information, like for argument's sake, off of Wall Street data, if you're getting it from Yahoo Finance, this is where they buy that information and get that. Actually, that information is free, and they get it from these same reports that you can get yourself. Now, the other thing about this report, and let me get out of here. Bear with me a second. All right. So the other thing I'm looking for too now is that report, and I want to show you this report also. I'm just looking for it. Bear with me a second. I believe this is it. One of the things that you guys, I'm going to go to the other one first. One of the things you guys hear me talk about all the time is price and volume. And one of the things I track on a daily basis is volume. Right now, you're looking at what's on barchart.com. They do this every day, all day. You can download it when it's done. And what it shows is it shows the stocks that have the biggest increase in volume. They also go all the way from biggest increase all the way down to biggest decrease. All right. One of the things that you and I have always talked about is one of the ways that you can track, and I'll close this for a second, I'll come back to it. One of the things that you can do to try and find ideas is track price and volume. As you guys know, which we talked about, stocks like GameStop and the rest of these with the short squeeze, volume showed up first. You can see it in the volume. Now, if you track this and you track it over here, you can see that, and I'm going to go back to it. You can see that this NVOS volume-wise was up 1,800%. All right. You can literally track these. You can see them. I track these. I look at the charts. And what's interesting is on some of these stocks, especially the ones that seem to be under some type of play, and that play could be from earnings. It could be from acquisition. Cooper Tire was up big the last 2 days, but Cooper Tire just got a takeover from Goodyear Tire. So you'll see things like that happen on a regular basis where these things can actually, the volume shows up and well as the price. All right. Now, it's the same chart. I'm just going to same table. I'm just going to a different view. And over here, again, you can see that's the name of the company. There's a symbol. It tells you how much the stock is up for the day. So again, I've seen this. I've been watching this. I bring it to you because if you start looking at this, what happens is certain names start to become familiar to you. You start seeing certain stocks that keep popping up off of volume. And again, when you see stocks, well, let me back up and close this out for a second. If you're investing in the market, if you ever notice this, that when institutions take a position and start to drive the stock, one of the things that happens is it shows up in terms of price and volume. You cannot hide volume, especially if you're an institution. If you want to go into the stock, you can hide your purchases, you can hide your sales, you can go into a dark pool, you can do a lot of things to hide what you're doing at that time, all right? But as you do it, eventually volume will show up, all right? So if you start tracking volume and price, you'll start to notice some of these things before or while they're happening. The key to making money in these short squeezes is to position yourself, hey, what's going on, Paul? Is to position yourself in the stock before the move starts. Now, as you saw in GameStop and AMC, if you're what they call last in other words, if you got into GameStop at $300 and change or $400 a share, you came in late, the stock already has started to pull back, all right? And that's when you lose your money. That's when you can really get hammered. So again, you want to be in early, believe it or not. The other thing about this is, which I also show is interesting, is some of the recent IPOs are up here with huge short positions. Now that's interesting on from two standpoints. One, institutional investors are the ones that typically get short these stocks. So what they're doing is they're getting short a stock, some of these IPOs, and what's really interesting is some of these IPOs have gone to set new highs. So they're shorting a stock, institution-wise, huge positions on a stock that's setting a new high. That makes me nervous, and I'll tell you why. If that stock continues to go higher, you're going to see it get squeezed. And that's when that stock will run for 2 or 3 or 4 days and have a 40, 50% move and then have a pullback if these shorts get squeezed. Now, if the stock starts to fall down and come down in price, which is what they're playing for, understand this. Once they go to cover, you're going to see it squeezed again. So track these stocks, track the volume, all right? So I wanted to bring that up, talk about that, which we did. And again, I'm just going to show you one more time. You can see the volume right there, guys. For those who showed up late, there it is. And all these pictures and charts are up on Instagram. So I say to you, one of the things I do, believe it or not, is I'll put this up on my screen during the day and I'll just watch it. And I'll watch it tick. And what I'm watching for is I'm looking to see which ones are moving up in volume, what's going on. And as things go on during the day and news gets announced, these things also will change in volume. So that's what I track. Now, the other thing I want to talk about today, and let me get out of this for a second. The other thing I want to talk about today was the Commitment of Trade Report, COT. For anybody that's trading in the futures market, for anybody that's trading in the commodities market, you trading any currency market, you trade in these markets, you must, I repeat, must follow the Commitment of Trade Report. Let me break down what the Commitment of Trade Report is. All investors, every trade that's done in the futures market is categorized and then filed and put into a report that's given to us. So we can't see what each company or each investor is doing individually, but we can see them as a group. Now, the Legacy Commitment or Trade Report, and I'm going to find it for you. Give me 1 second. Bang. And right now, what you're looking at is I get my data for Commitment of Trade Report from barcharts.com. Barchart.com is what we're on. You can see it at the top. All right, the Commitment of Trade Report breaks the legacy report, the first one, breaks them into 3 different categories. The large speculator. The large speculator, again, put it in common terms, the hedge funds, the institutional investors, all right? They're managing money for clients and managing for their portfolio, but they're large investors. They're buying large positions. The other one that they track, is the commercials. The commercials are the companies that the commodity is either their raw material that they need to develop, or they develop the raw material. So they're, at some form or another, either they're using that commodity to make their product, or they are the ones that manufacture the commodity. Those are the commercials. They're not speculating on the prices of these things. Commercials are basically trying to hedge themselves against price shock. All right? That's what a commercial is. Real simple example, a farmer in the Midwest growing corn is a commercial in the corn market. Why? He's not speculating on corn price. He's actually growing corn and going to make delivery. He's in the corn market to hedge his positions. All right. The other group, which is a very small group, I call them mom and pop. You and I are mom and pop. And what I mean by you and I are mom and pop, we're small investors. We might buy 1 contract, 10 contracts, but there's nothing big about us. All right, the commitment to trade breaks this down. The report that we're going to get this Friday, when the market closes this Friday, the report on the commitment to trade is, let me come out of this for a minute. The report on the commitment to trade that comes out this Friday is for last week from Wednesday to Tuesday of this week. Let me say it again. The report that comes out this Friday, it starts from Wednesday of last week, Wednesday, Thursday, Friday, Monday. They collect, all of that has to be turned in by Tuesday. And then Wednesday, Thursday, and Friday, they compile the data, put it into a report, and they publish it on market close on Friday. All right. Now, let me show you this. What you're looking at right now is the chart on corn. You're looking at the chart on the corn futures. On the bottom of that, you'll see a green line and a red line. The green line is the commercials. All right. The red line the green line is the large speculators. I apologize. The red line is the commercials. When you look at this report, commercials typically set the direction. And then once the direction's set, the large speculators drive it. The reason why I'm smiling is if you look down at the bottom between the green and the red line, you'll see that the correlation, again, I'm not trying to be fancy here, but the relationship between the two is they're complete opposites in most cases. So right now, the commercials are telling us, fundamentally wise, that they're shorting corn as a group. The reason why they're shorting corn, these farmers believe the price is too high. It does not mean that they think corn is going to zero. It just means at this level, they're selling their corn. They literally are selling corn that haven't even grown yet. Again, it's a futures market. If the price is too high, follow me now. If the price is too high, they think it's too high, they're going to sell crop that haven't even grown yet to reap in that higher price before corn starts to pull back. All right. Now, again, the commercials, the large speculators, they're driving this thing. They always do. They push and they push and they push. Let me show you a report. Now, what you're looking at is a summary of the report. So let me explain what that means. Let's see, which one is this? There's corn. I don't want that one. I want this one. Again, the second one from the top is corn. You can see right now that there are 505,000 contracts of corn on the short side. Now, each contract is for 5,000 bushels. You can do the math. What this is telling you is that the commercials right now fundamentally believe that corn price is too high and that they're selling into the rally. For you and me, what this means for us is, and let me come out of this, well, I'll leave it there for a second longer so you can see it. I do apologize. What it means for you and I is that, and this is what you hear me say every week, fundamentally, corn is overvalued and play it to the short side. But with that said, I look at other indicators. So fundamentally it's there, but if you look at the chart on corn, which I put up here again, you see that it doesn't even look like it's anywhere close to actually retracing and pulling back and coming down. So all I'm saying to you is, if you're an investor, you can play corn to the upside, which you can do right now, play corn to the upside, keep an eye on the 10-day moving average. If that corn starts to break below its 10-day moving average, then I would look to close out my long position. I'm going to show you right now. You can see on corn, second from the top, what you can see now is you can see that the large speculators are net long corn. I mean, they're just buying it and buying and buying it. Now, what this means is they're going to drive the price up, and they've been driving the price up. Once they decide to stop, and once they see the target that they're looking for, and this thing starts to go down, these large speculators do what we call a LIFO system. And again, I'm not trying to get too fancy here for you. LIFO means that the last position they purchase is the first one they sell. In other words, for those of you who trade, they put stop losses in, either physically or mentally. So if they buy corn at $5 a bushel, they probably have a stop in there at $4.90. All right. Now, as the corn moved up and kept moving higher, they raised their stops on all of it. And what happens is the last purchase, which is probably at the high, is one that they're going to sell first. The first purchase they ever made is the last one to come out. But again, all I'm saying to you is that they're going to start shorting this, coming out of this thing. And as they come out of it, believe it or not, what happens is as the price comes down, these commercials will start to close out their short, and the speculators at that point will continue to sell it. And at some point, if they sell it and it keeps going down, they'll turn and go short. The large speculators are momentum traders. All right, that's what I wanted to give you on the commitment of trade report. Let me give you some other ones here just so you can see. The other one pretty much is the same. So again, I'll just go back to the chart one more time. I know I'm redundant, but there you go again. For those who don't understand this, trust me, start tracking this, start looking at this, use it. You can see the correlation of what's going on with these markets. One of the things I always say to you guys is you got to be forward looking. You got to find the data, you got to look at it, you got to make some interpretations. All right. What you do then is after you interpret this data, and let me come at this because I'm talking to you guys now. After you interpret this data, you have to put something else with it, some other indicator. All right. The commitment to trade report is a pure fundamental when it comes to the commercials. You have to tie it to some technicals and decide when to get in and when to get out. It's worked wonders for me. And when I say wonders, and I'm not sure if you guys understand this, but a small move in the commodities market because of the leverage that you get, can easily drive your portfolio up your position up 100, 200%. Not uncommon to have a 400, 500% return on your options on the futures market. You want to talk about leverage? Leverage is options on a futures contract. You'll get leverage on top of leverage. Again, I know you guys, I've talked about this back in the summer. I went long corn. Contracts expired. I did not go back in. Corn moved from basically where I was in at, looking at it, was down in the low $3 range. And corn, as you see, has moved up north of $5. For every dollar move in corn, that's a $5,000. That's a $5,000 move in your portfolio, in that position. So corn going, and by the way, those contracts, and those who know me know I use a hedge synthetic. Those contracts cost me about $2,000. All right. So you get an idea of what's going on here. That type of move, a $2,000 turned into a $10,000 profit. That's what you're talking about. That's why I get excited about this. And that's why I tell you guys, you can put up triple digit returns on some of these trades. The other thing about too is I don't trade the futures. I'll trade the options on the futures. The reason being is this. For those of you who've never traded commodities, understand this. Not only can you lose your investment, but you can also lose more than what you invested, especially if you don't know what you're doing. So again, Paul, I'll get your time frame. In the commodities market, trade the calls and buy the calls or buy the puts. The most you can lose is those contracts go to zero. I would not be writing contracts, nor would I be buying the futures contract or shorting the futures contract until you know what you're doing. Those have unlimited risk. All right. So again, if you know what you're doing, great. The time frame, Paul, this is not a day trade. I should have mentioned this. The commitment to trade report is best to read on a weekly chart. And the reason why it's best to read on the weekly chart is the data only comes out once a week. It's best to read it on a weekly chart, and you'll get a better picture on the weekly chart because it'll take out the volatility. Now, for me, when I actually go long or take a position, I am looking for a substantial, what I call trend reversal. So for argument's sake, if I decide to go short corn up in here, the reason why I would short corn is because I believe that corn would have a major reversal and the corn price would drop from $5 and change down to $4. I'm looking for a major move. I'm not short-term trading this. Now, with that said, I know some people that use commitment to trade report and they short-term trade with it. You can short-term trade with it right now. I mean, bottom line is you can go long corn. I know it's extended, but corn, and then we talked about this last week. One of the things that you look at when you look at this commodities market, especially the grains, is this brutal winter that we're having so far. It's got to hurt supply. If it hurts supply, prices have to go up. And that's what you're looking at with these large speculators. They're looking at the same thing. They're forward-looking like we are. They looked at that weather report and they track weather and they're looking at that and they're going, we think it's going to be a small crop. Supply shrinks. Even if demand stays the same, supply shrinks, price go up. Supply increases, price goes down. All right, that's just as you guys know, Econ 101, supply and demand curve. All right, let's see. I covered everything that I had on here I wanted to cover. So I talked about volume, I talked about the commitment to trade report, and I talked about the short report. I'm here to answer any question that you guys might have. Just so you know, I talked about this earlier. My screen was all red this whole week so far. So my shorts, I closed out all my positions. All my trading positions are closed. I'm basically sitting in cash in my trading position. My longer term positions, most of them are actually all of them are techs, and those stocks actually have a little bit bounced back. So it seems like the sell-off has slowed down. They're quality companies with good earnings, good revenue. So that I'm long them to the long term. So I've still got tremendous profit in it. But again, they basically been down this week and they're flat today. So the other thing I looked at too is I do not think, let me bring this up. Some of you know that one of the things I talk about all the time is the yield curve and what's going on with the economy in terms of yield curve in the market. So one of the things I want to bring up, I always say this, that in my lifetime, every inverted yield curve we has led to a recession or a major contraction. All right, that's still in force. The other thing though is, by the way, this Novato, NVOS, the volume on this thing is just crazy. Take a look at it when you get a chance. So anyway, what I was going to say was, I'm going to take this to the other side. We've never, ever had a recession when we had a classic yield curve. All right, never. Now, in my lifetime, I always say things have never happened. I never thought in my lifetime I'd see zero interest rates for the Fed on treasuries. And basically that's zero. They're at 2 basis points. A 1-month treasury right now is at 2 basis points. I'm not sure what the bounce happened today, but it's at 2 basis points. That's zero. All right, so I never thought I'd see that. So in my lifetime, I've never seen a classic yield curve. Low short-term rates, high long-term rates. I've never seen us go into a recession when we had a classic yield curve. We have a classic yield curve right now with the Fed pumping plenty of money in there. I do not think we're going to look at a major contraction. I do not think the market's going to sell off. If anything, you might see a near-term correction. And these near-term corrections can be healthy. They really can. Why? People are taking profits. They're going to shake off things that they really don't want. They're moving around. They're repositioning themselves. You're seeing cash flow in. A lot of the value stocks for the last 2 days have been up, and the growth stocks have been down. So all I'm saying to you is that if you have a quality company that you like and you're taking a long-term stance, go ahead and buy it. I don't think from here you're going down a lot more than this. I don't think we're gonna have another pullback, a major pullback in the market right now. I just don't see it. All right. And by the way, for you guys who don't know, study yield curve. Every recession in my lifetime, I won't tell you how old I am, but the gray head kind of tells it all. Every recession in my lifetime has two things in common, actually two. One, we had a Republican president in office, and two, inverted yield curve. All right? Every recession we've had in my lifetime. Now, again, I'm not going back to 1901. I'm not going back to 1921. But even then, if I remember correctly in my studies, even then they had inverted yield curve before it pulled back. Actually, I'm not sure if they had inverted yield curve. The Fed was around then too, yeah. All right. So now I have some questions here. Ham is asking me to take a look at FVRR. Isn't that stock due to report, or did it just report? I thought that something was going on with that in terms of earnings. FVRR. All right, had a pullback. So earnings did come out. Let's see what the number was. Looks like the estimate was for 10 cents. The report a loss of 23 cents. So I can't go into the fundamentals on that, Ham. You know better than I do. I'm looking at the chart right now, and let me switch it. By the way, for you guys, one of the things I do to pull out the volatility when I look at technical analysis, I'll switch the chart to a weekly chart. The reason why I switch it to a weekly chart, it takes out the volatility and I can see more. So here's the deal. Support, it looks like the major support in this stock was in the 270, 260 range. It pulled back and actually went down to 240, which is the middle of that old trading range, and then it ended up bouncing back and closing right at the bottom of right at the top of the old trading range, the bottom of the new trading range. So basically what I'm saying to you, Ham, is I don't see any reason to sell the stock based on technical analysis. Based on what happened in the marketplace, there's been profit taking, things have been bouncing around. It bounced back today. I would stay long it. Now, volatility has kicked in, but I would stay long. And again, well, you know better than I do in terms of the balance sheet. I haven't looked at that. But basically what I'm saying on the chart is I don't see a problem here. And even on the day when they reported earnings, and here's what's really interesting. The day they reported earnings, that day and the next day, volume was pretty light. So in other words, investors didn't load up going in, and investors didn't come, sell out going out. In fact, the day after the earnings were reported, the stock was actually up a little bit on light volume. So I think you're all right. You got the contracts expire in 2023, so you're long the leaps. So those who don't know, leaps are long-term options, long-term call or long-term put options. So he's long the leaps. One of the things you guys can do to improve your performance on your leaps is to, you can actually write calls against it. For those who know, you can write calls against it to generate income and use that to lower your cost basis. And a friend of mine, I'm going back some years now. I'm going back to years when I still lived in New York. A friend of mine worked on a trading desk, and he would buy leaps and he would write calls against it. And by the time the leaps were due to expire, his cost basis was almost zero because he kept doing that. For those who understand what I'm talking about, great. Write the calls. If the stock or the leap starts to run against you, close out the position for a slight loss. If the leap stays flat or even goes down, let that position right out and keep your premium. You know how to do it. So that's a great thing to do. Now, I did have another question here. Let's see what this question was. Any reason why GameStop and AMC are ripping again? I can't speak for AMC, but GameStop, by the way, what's up, G2? I think that's you. Maybe it's not. GameStop, the last hour of the day, GameStop was halted trading. And the reason why GameStop halted trading was, a poor man covered call writing. Yes, hi. The reason why GameStop halted trading, I believe, and I was looking at that news, I believe the CEO for GameStop either was fired or resigned or stepped down. That was one of the things that happened. And the stock basically started running from there. Now, it was up to $91 before the market closed. After market hours, I'm looking at it now. I'm going to look at it now. See if it's actually back open. It was back open. So last I saw it was at 85. All right. And now at the market, let's see, it closed at the market trading. Post-market, all right, GameStop's at 119. So it was up 47, 46, $7 on the close, when it closed today. And then after market trading took it up another basically $28 to $120 a share. And that's where it's at right now. So again, that's GameStop. That's what's going on. For those of you that want to trade this thing, just again, I can't emphasize enough. Please be careful. Please be nimble. Just please. This thing is volatile. AMC, I'm not sure what's going on with AMC. The only thing I can think about AMC, I haven't seen any news or heard any news. So the only thing I can think about with AMC is maybe the fact that, AMC is only up $1 and change during the day. And the after market closes up another 70 cents. So you're not getting a big move there. Again, guys, I'm just telling you, go to bar chart and look at all U.S. exchanges volume percent advances and look for those and then start tracking those stocks. One of the stocks, by the way, all right, and I'm going to do this, and I normally don't do this, but I'm going to put this up. I have no idea what's going on here. I'm just looking at this stock, and I keep looking at the chart on this. And what's interesting about it is it's one of these stocks that I had mentioned that had gone public basically back in December, this past December. And the stock gapped again. Volume has been crazy, and it's gapped again, and it has it doesn't have a large short position, but it has a tremendous amount of volume behind it. And again, for those of you who kind of new to this, price and volume breakouts are strong. Price and volume breakouts. When you see a stock that's, and I'm going to give you the numbers on this today. Bear with me a second. So today, let's see, PubM today, average daily volume for the last 10 days is 712,000 shares. Today it traded 2.9 million shares traded today. All right. That's what you're looking at. That's a breakout. All right. That's a major move. I don't know what happens from here, but again, if you're tracking the stock and looking, it's made a major move. And this is one of the things I talk about. And that is with these IPO stocks, when they decide to buy and the volume steps in, they can really run these things. And so you can see it today. The stock closed yesterday. Let's see. Stock closed yesterday at, it looks like, closed yesterday at $46. Opened today at $55 and went as high as 62 and closed at 60. All right. But where's it showing up? Volume. Volume. Price and volume. This is so powerful. Again, I'm not familiar with the company. I know they went public. It was an underwrite I typically don't follow. But I'm going to track the stock now and see what's going on. All right. Any other questions? Fire away. Ask Professor Milligan. By the way, just so you guys know, I actually am on now FinStream TV. It's on Roku. It's on TikTok. It's on basically all your social media. I did a piece for them, and they actually have all the videos. I posted the videos, some of the videos on my, I post some of the videos on ProfessorMilligan.com. The full-length video, I believe, they're going to post to Roku TV. So if you have Roku TV, look up FinStream TV. I'll type it up, FinStream TV. All right, that's who you should look for. And again, that's me up there talking. And if I do it another one, which I probably will, I'll invite some of you guys to come on and be guests and ask me questions. So basically all it is asking questions. All right, any recommendations for leaps? I have not looked at leaps, but make sure you understand this, Ben. The leap itself is nothing more than an underlying security that's based upon a security that's based on the underlying asset. In other words, a leap is still based in the price of the leap and how it performs is still based on the underlying stock. So what I would say to you is find a stock that you really like long term and then see if they have leaps. The other thing you can do too, believe it or not, you can see if they have leaps. And some of these stocks actually have futures accounts. You can actually trade the futures on some stocks. So I'm not recommending the leaps. I'm going to say to you, Ben, is if you find some stocks that you really like long term, some stocks that you like that you want to own, look at the leaps. Look for the leaps. And again, I don't know who was that? That was Ham. Ham, you were talking about leaps, right? Was that you who said that you had some leaps? Maybe it wasn't you. Whoever was on here that said they had some leaps, if you want to share it with Ben, feel free. Understand, Ben, these are people's opinions. They're not telling you to buy it. I don't want anybody getting sued because they made a recommendation on my show and that person did it and then they lost money. That's not what we're about. So if anybody shares a stock on here, it's their opinion. It's what they think. You should still do your own research and make your own decisions on whether or not you want to buy, sell it, whatever you want to do with it. Again, these are just people's opinion. This is just my opinion. And as good looking as I am and as smart as I am, it's still just my opinion. That will not make you money. It's just my opinion. Hopefully you'll learn from this. You can take that information and make some money with it. But again, it's my opinion. So I'm not sure if anybody wants to share any leaps. If you do, again, feel free to share the leaps. TWTR, Twitter. Again, I'm switching to a weekly chart. Weekly charts give me so much more information. Let me zoom out a little bit and see what's going on with this thing for a while here. Switch it to a monthly. Jack Dorsey turned this thing around. Here's what's interesting about Twitter. Interesting. Stock went public in 2013. The high when it went public in 2013. Oh, I got to get this because this is interesting. The high when they went public in 2013 ended up being, come on, get there. Excuse me 1 second. I need, bear with me 1 second, I apologize. I'm working with a mouse that does not want to work with me. So yeah, when it went public, the high when it went public was $74 a share. Guess what? And that was in 2013. 8 years later, it finally got to the old high. I'm laughing about that because it just shows you if you buy these things based upon I guess popularity and other things like that, you're just crazy. All right, so here's the deal. Stock ran off of earnings. You can see it right here. There's a gap in here between 60 and it looks like 60 and about 65 in that range. You might see it fill the gap. Since earnings came out, it's in a trading range between 75 and 70. This is real simple, guys. Stock break through 75, get long. Stock break below 70, get short. It's right there. It's what we call right now. It's at the bottom of a trading range, a near-term trading range. Let me zoom in even more. Yeah, the bottom of that trading range is basically $70, give or take. The top of that trading range is 74, 75. This stock breakthrough and go to its all-time high, which was about, looks like, again, I gotta, position my mouse. The all-time high, this stock break through that 74, basically that stock break through 75, just go long. And hopefully there'll be some volume behind it. If it does not break through 75 and it breaks down below 70, 68, 69, you can expect it to come back and test all the way down to 60. All right. I don't think you'll come back to that much if the market holds up, only because the volume that pushed this thing really pushed it. So I don't expect this to fill that gap until that volume starts to dry up. But you have a nice trading range here. Good luck with that. Interesting. I never was a Twitter fan just because the stock has basically, as you saw, as I basically said, for the last 8 years, the stock has not performed. WKHS, don't know it. Workhorse, another IPO. Not too long ago, I should say. So I'm looking at a monthly chart on Workhorse. All right. You guys can't see this. Maybe you can. Pull up a chart on Workhorse. Pull up a chart on Workhorse. All right. If you have a chart in front of you on Workhorse, the first thing that you notice is that there's a volume increase and a gap. Volume increase back here in January. And huge volume. I mean, the average daily volume again is 17 million shares. That day traded almost 80 million shares. And then the other thing about it too is volume followed and the stock ran basically for the next 3 or 4 days. You can see it there. And now it's pulling back. And then we had some volume to the downside. I don't know what's going on with the company. Again, it looks like it looks like something bad's going on. And the reason why I say that is because, hold on a second, let me just. Yeah, this is interesting. So I'm not sure. Again, I got to check the news. I'm not sure what happened, but the stock hasn't reported earnings yet. The stock was down to, the stock, had a high on Monday of 28. and a low of about 12 and closed at $16 a share. So they dumped this. And the volume again was heavy today, but slightly up a little bit. They dumped this thing ahead of the numbers. I would be really careful with this. If you long it or own it, be careful ahead of the number. In fact, I can't even figure out where support is right now. Bear with me a second. I'll see if I can find support, figure out where it is. Yep. Right here where it's at, 15. This is support that goes back to July of this past year, up to 2020. So you got it. It's right there at support. That old trading range was between 14, 15 where it's at, and 17, 18. So you're in that trading range right now, and there's a tremendous volume there. So just be careful with it. Paul, I go from a weekly chart to a daily chart back and forth. I look at all of it. Let's see, what's up there, Lee? CCIV. What is CCIV? Let me check my time. Okay, I got a few minutes. Whoa. Where you guys find these things? Again, Churchill Capital, don't know what the company does, don't know what they do. I'm just looking at the chart, and I'm in a daily chart. That's for you, Paul, just in case you want to know what I'm looking at. And I have no idea what happened with this stock. And what I mean by that, bear with me a second. I don't want that. I don't want that. Come on, close that out. Thank you. Oh, come on. I apologize. I'm just in here trying to work with this chart so I can see it. I have no idea what happened here. I'm zooming in, but I can tell you one thing once again. Stock was trading down here below $10 a share, right around $10 a share. And guys, I can't emphasize this enough. If you're not sure what I was talking about earlier in terms of volume, let me pull up this CCIV. Again, I don't know what's going on with it. The volume was 1.6 million shares, and that's the average daily volume. And then on January 11th, it traded 108 million shares. And from that point on, the stock just rocked and rolled. My bet is it sounds like one of these companies that basically was probably part of a SPAC that ended up going public from the SPAC. Maybe that's what's going on. But yeah, the volume's there. Now you got a huge gap to the downside now. You're basically stock at 28 sitting there at the bottom of an old trading range between 28 and 35. And that's where you're at right now. I'm not sure what to do with it. I'm not sure if I'm gonna be long or short. I'd move to the sidelines and become a spectator. Yeah, there it is. CCIV is a SPAC. Figures. Yep. All right. Announced merger with Lucid Motors. Yeah, so that's what's going on. And by the way, from everything I've been reading and seeing, for those who are into this, it looks like that the Chinese are going to be kicking our butt in terms of electronic vehicles. They seem to be making the major move towards that and that technology. It seems like that's what's going on. Again, I am not saying to short Tesla. All I'm saying is that these Chinese electric car manufacturers, they seem to be doing really well. Again, I'm just going by what I'm seeing in terms of the action, the price action in the stock, the volatility, the movements in the stock, and what I'm reading about new developments and so forth. It seems like the Chinese electronic vehicles are going to be the I guess leaders in that industry. Yep, I agree with High. For those who didn't see what High said, one of the things that's been around Wall Street since I was a pup: buy on the rumor, sell on the news. Buy on the rumor, sell on the news. All right, and that's what it looks like here is on CCIV. They brought on the news. They brought on the rumor and they sold it on the news. All right, any other stocks you want me to take a look at real quick? I'll take a look. Again, you guys typically know more about these things than I do. By the way, let me take a look at EV. EV. Again, I'm switching to a monthly chart. I just want to see what's going on. A bigger picture. Figure stock's only been around for a couple of weeks, so now I'm switching to a weekly chart. Again, it takes the volatility out. And I need to see that. Wow. Talk about volatility. All right, I'm looking at a weekly chart on this. Weekly chart, a lot of volatility, but the thing seems to be moving higher. And the other thing too is, again, you can see it, same type of story. This company went public. Oh, I'm looking at Eaton Vance. That's not what I'm looking at. I'm looking at the wrong company. I'm long stock, so I'm not looking at Eaton Vance. So I pulled up the wrong stock. All right, let me move to Tesla. Somebody's asking about Tesla. TSLA. Correct me if I'm wrong. Isn't Tesla at its, it's basically the low for the year, was hit yesterday. I think it was. I'm not sure what to tell you. I'm going to pull up a weekly chart, take out some of the volatility just so I can get an idea of what's going on here. So here's the deal. All right, I'm looking at a weekly chart. For those of you, again, if you're into technical analysis, volatility shows up, switch it to a weekly chart. It will take the volatility out. I also look at a monthly chart. So I'm looking at a weekly chart on Tesla, and you can see it becomes obvious. There was a short trading range between, looks like about 275 and 335. Then there's another trading range between 335 and looks like about 475. Then it's nothing but a straight push for the next couple of weeks. And then it formed a trading range between 780, 785, around there, to the all-time high of 890. And so what happened today was, yesterday it touched on it. It touched to the bottom of the near-term trading range. But then you see today it broke down. It broke down below the average daily trading. It broke down off the most recent trading range. I apologize, I got tongue-tied. And it broke down, and also it went below. Now it closed right at resistance, which is the old trading range. That right here at that 275, 270 number. It's right near there. But on a technical basis, if it does not penetrate that old trading range at 775, 800, if it does not penetrate that, I would expect it to come back and maybe trade in that little small narrow trading range between 600 and 700. The other thing to notice too, and again, I'm looking at a weekly chart. I'm going to switch it to a daily chart. But the other thing to notice too is that volume has been drying up. And I shouldn't say drying up, but volume has become really light. The average daily volume back in December, in fact, let me pull it up. Average daily volume back in December was about 72 million shares, 10-day moving average, and now it's at 23 million. So you can see that volume is really, really drying up. And one of the things that you look at is if volume's drying up and the stock's not running anymore, it means that people aren't willing to push it, and they'll let it drop down to a price level where they want to go in and buy it again. So right now, with no volume in it, stock drifted down, and the volume's just not there. All right, so that's what's going on with those. Let me check my time. I got another couple of minutes to do a couple more. I see that GameStop is running again, So yeah, I see now. Well, yeah, so it penetrated that 200. Now it's back at 184. Interesting. Again, I like trading volatility. I have no problem trading volatility. But if you're going to trade volatility, which is what I like to do, you need to make sure that you're hedging your position. And in GameStop, the options are so rich, it's just almost hard to hedge yourself. One of the things that you might look to do in terms of GameStop, if you want to hedge yourself, is actually, if you want to play it to the downside, write a call and then use that extra premium that you wrote the call with and buy a put. As you guys know that, but problem is that you'll be neck at that call. If that thing runs, you're just going to get hammered. So you might want to write a call, buy a out of the money call to hedge it, and then take that money and buy the put, and then play it to the downside. If you know what I'm talking about, great. If you have no idea what I'm talking about, then stay away from the options. It's not for you. Not yet. Not yet. All right. Any other questions? I'm getting close to my time where I need to shut off because I need to save this. Will the market sell off if GameStop goes to all-time highs. I don't think so anymore. I don't think the market's going to sell off. A couple things going on. One is the market now has had a taste of GameStop and know what to expect and know what to do. Two is GameStop running now. People are realizing that it's not basically fundamentals. It's more of a short squeeze or trader squeeze. For those who understand, and I'm about to make a statement, GameStop is trading like a cryptocurrency. There's no fundamentals behind it. It's basically just moving off of supply and demand. I'm looking at it now on Financial Channel. It's saying GameStop is jumped at the hours following intraday surge. So pretty much what we knew. And right now it's at 179, 178 after market trading. All right, any other questions before I hop? I've got a minute or two before I hop to answer any other questions, because I do have, I want to save this. I always want to save my recording, so I do have to hop. Again, you can follow. I post this on IGTV. I post this also on my YouTube channel, so you can always get this. The other thing is, do you like using exponential moving averages for the TA? I use a simple moving average. All right, I just use a simple moving average. I don't use exponential. I mean, it's kind of, I don't put much weight behind the moving average. I look at the near-term moving average. I use a 10-day. And the reason why I use a 10-day, that's basically 2 weeks in trading. A month in trading is 20 business days. So I typically look at the 10-day moving average. I want to see what's going on near term. I do look at the past, but the past does not mean as much to me as what's going forward. So I typically use a 10-day moving average, a simple moving average. The other thing too is I'll look at my Bollinger Bands. I'll set my Bollinger Bands to a 20-day moving average. And one of the things I like to look at my Bollinger Band, believe it or not, is I like to look at one standard deviation as well as two. And the reason being is when my stocks start to break out, they typically move up one standard deviation, and they'll run outside of the one standard deviation curve. So they're running between one standard deviation and two standard deviations. It's how I confirm if it's an uptrend. And when they really get extended, or they're doing really well, they'll actually break out and break in above the 2-day moving average. Excuse me, the Bollinger Band set for 2 standard deviations. You'll see it move above that. Again, I got tongue-tied, I apologize. But 2 Bollinger Bands. And if you know anything about 2 Bollinger Bands, it means if you're outside the Bollinger Band set for 2 standard deviations, you're running into tails. Again, I'm not trying to get too technical with you guys. I'm just kind of letting you know what's going on. All right, with that said, I got to hop. I need to save this, and time is going to run out on me. Have a great week. And by the way, anytime you want, you can always DM me some questions and ask Professor Milligan, and we'll get there. Have a great one, guys. I'm going to hop. I need to save this. Let's go make some money.